Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, co-founder of LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking RH, or the former Restoration Hardware. This is high-priced, goods for your homes, couches, artwork, everything. Expensive. Shares are down over 50% so far this year, Andy, and it seems like we've seen a big pullback in consumer demand in this particular space. What kind of data do you guys have out of LikeFolio ahead of earnings?
Yeah, as we came into this, research, I was thinking it would be a lot like when we talked about Lululemon last week. High end doing well, everybody else not so much. But when we look at the macro trends driving, Restoration Hardware's business, or RH's business, there's just too much headwind for them to overcome. It doesn't matter what price point really you're at. We're seeing mentions of people buying a home down significantly, home renovation, moving, all the things that drive demand for what these companies do, significantly down from their COVID peak. And even on a quarter-over-quarter basis, we're seeing that down and softening significantly as interest rates rise. No big surprise there. The company, slashed guidance in its last quarterly call. Just basically came out and said demand is softening, and we don't know how much it will soften. But when we zoom in on Restoration Hardware specifically, consumer demand levels, purchase intent mentions down 53% over the course of a year, and just continuing a pretty nasty slide from that COVID peak. And there's kind of no light at the end of the tunnel, I think, for Restoration Hardware. At this point, I think they're going to have a tough time on their earnings call having anything optimistic to say. I think interest rate uncertainty is certainly weighing on them. And then when we factor in just one more factor that's kind of working against RH at this point, it is a competitive factor. We look at all these companies that kind of compete against each other in a single chart, and you can see there's really only one that's a standout versus the rest. That's Williams Sonoma. They own the West Elm brand, and we're starting to see some real indications that consumers are trading down from Restoration Hardware to West Elm, and that's the only one where we're seeing positive growth. All the others, Wayfair, IKEA, TJ Maxx, Restoration Hardware, falling, and it's a tough situation for Restoration Hardware heading into the rest of this year.
Andy, I agree with basically everything you're saying, but there's a couple exceptions here to this, in that, number one, people definitely seem happy when they go there, right? Your happiness level is pretty high, but this is a high, Tom was right, the highest end furniture. And one thing that you, as an investor, that you can't ignore, number one, Berkshire Hathaway loves this company. They've started a position in there. They've got an 8 PE, so the company still does pretty well and trades at a low valuation. And the last, their CEO, Gary Friedman, he's a little bit of a gunslinger in terms of, he comes out with statements like, we think our stock is undervalued, and he okays up to 30% of the company buying back their stock. He just okayed $2 billion in share buybacks. So in terms of looking at this several ways, there's some compelling reasons to look at this name a little harder. I understand there's macro headwinds for this company, but they've sold this thing down a long way, and they've got an aggressive CEO, and oh, by the way, outlingers Warren Buffett on their horizon, and he likes to buy things that look attractive. So how do you put all these different factors together? I understand the slowing economy, but there's a lot of other factors at play here.
Yeah, I'd say, I think when you talk about a company doing buybacks, or you talk about Warren Buffett getting interested, I think you're talking about long-term value. And, I think that that's definitely a possibility here. I do think Restoration Hardware will be one of those companies that's one of the first ones back. When we start to see positive signs in the housing market and the home renovation market, I think this will be a company that will be one of the first ones back, because quite frankly, its customers have money and they have money to spend. unlike some others. The only caveat, the thing that kind of threw me off coming into the segment was that competitive threat from West Elm, and we think that's very real. They don't have the consumer happiness levels that RH does, but they are clearly, at least according to our data, stealing some market share because of their pricing, and I think that could be a long-term threat. But I think you're right. I think it's which lens do you want to use? If you're using a near-term lens, RH has incredible headwinds that it's flying into and is not doing very well. But if you want to use a long-term lens, the stock is already down very significantly. And like you mentioned, the valuation is low, which they have earned because their growth rate is very low. From there, this is one I like on a watch list, and hopefully an earnings event like we have, sometimes that can give you the ultimate buying opportunity to really up a position. But we'll have to see what the company says, how many shares they want to buy out of the company in the future. But so far, all that's kind of done is put a little bit of a floor under the stock. It really hasn't caused any rally.
Yeah, Andy, I was checking out the scatter plot that you guys have with RH, and it seems like everything's positive on this company from a lot of the consumers, according to your data. It's up at the top end, but as far as purchase intent mentions, it's down towards the bottom there in the far left-hand corner, which you want to be higher, but you don't want to be left. And this
Right.
kind of gets into my question here, where are people want to buy RH stuff, but they're not going to pay $10,000, $15,000 for a couch, but they'll go to West Elm, which isn't low end. It's probably upper middle range. And Williams-Sonoma, that owns West Elm, had great earnings last quarter, just a few weeks ago, and that they're not completely trading down to maybe a discount retailer in this space, but they're going that middle of the range just due to inflationary pressure. Are you seeing that not only for RH and in this sector, but other sectors where people will trade down to maybe mid-tier type of companies?
Yeah, a little bit. I think it really depends on the sector. When you have headwinds like we have in housing, it's just almost impossible, for a company at the very high end to do extraordinarily well. A lot of people, I think, that shop Restoration Hardware, at least a good chunk of them, may be going a little bit outside of their comfort zone when their HELOC is at 2 or 3%, and now if it's up at 7%, 8% interest, it gets a lot tougher to pull that trigger. I think that's a lot of what's going on at Restoration Hardware. But I think overall we do see that the more affluent demographic is the stronger demographic in most sectors. I was surprised to see Restoration Hardware having so much trouble. But again, I think that you laid out the case for West Elm pretty well. It's RH-like, but at a lower price, and I think that's exactly where people want to be right now.
Yeah, I've been in enough of those stores over the last year and a half for my head to pop off because I can't take it anymore. But I know the price point differences, and it's pretty wide for similar type of items. So good discussion there. Andy, real quick, going into earnings, you guys, you said you're pretty negative. Maybe what's your score on this one?
Yeah, I just don't see any reason to get super positive about it. I think the stock's down enough that officially we're neutral on this and kind of a wait and see. But I don't see any reason why the company should be super excited about the remainder of the year.
All right, great stuff. As always, Andy, appreciate you bringing the data. Have a great day.
Thanks, you too.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down the data.